Hi everyone, today we're talking about Alibaba earnings that came out a few days ago. A little bit slow to update you, but there's so much going on in the stock market right now that I'm trying to get all these videos done. But Alibaba, one of the positions that I currently have shares in, so I obviously took a big interest on it. And as well, I had JD that actually reported earnings a couple of days ago, which I made a video about. And JD earnings were pretty strong. I was really happy with them. They had a big, massive day and then ended up coming down to about 2% gain, which was a little bit disappointing. But there was a bit of negative news that came out about China, and that's why it went down. Alibaba, same again. Some amazing numbers came out of Alibaba, which we're going to get onto in a little bit. But they had a couple of, well, China had some negative numbers that came out on the day of earnings, which kind of pulled the stock back a little bit. And if it wasn't for them, maybe the stock would have gone up a little bit more, because on the day, Alibaba stock only went up about 1.7% because of after these numbers, which was like, wow. Are you kidding me? Like, they've just reported these numbers and 1.7%. Like, if Amazon was doing these numbers, then the stock would have gone up like 1,000%. Like, it was just crazy. It was like, what's going on? Just because of this China trade war and this China slowdown that's causing so many problems. And then you got a company like JD, Alibaba, they're reporting these numbers that are fantastic. You're like, what slowdown's going on in China right now? It's absolutely crazy. So yeah, Alibaba reported some numbers, and I was really happy with the numbers that came out of Alibaba, especially when we talk about all this pressure of this China slowdown, the trade war, and two positions that I own, JD and Alibaba, come and report these numbers, and you're like, wow, these companies are just super. The only thing that I was like a little bit like, oh, that's not very good when I was reading the actual earnings from Alibaba, is that they took a little bit more market share off JD.com, and I was like, oh, Alibaba, you're doing so well, but just leave JD alone a little bit because I've got shares in them as well. So it was a little bit like that when I was looking to the earnings, but yeah, some really good numbers from Alibaba. So EPS 50% year over year. Revenue 51% year over year. Now, obviously, the forecasts for this year aren't going to be as good as this. There was a little bit. I feel like when I've looked at the forecast as well, I feel there was a little bit of sandbagging going on with the forecast. Like, they were a little bit conservative over what they've put out. I feel like Alibaba can beat them numbers that they put out quite easy, but they've kind of given them space. Amazon do it as well, so they kind of copying off the big brother Amazon right there. But I feel like the numbers of the forecast will be able to beat massively again. But with all that's gone on, and the EPS is coming at 50% year over year growth, revenue 51% year over year growth, it's absolutely fantastic. But the forecast is still pretty good. We're talking double digit growth still next year, this year. But I'm absolutely chuffed with their numbers. There's not many companies out there that are growing at this rate that Alibaba is right now, especially with the amount of pressure that was on them. Active buyers, there was so many things out, because Alibaba's in so many sectors. I was trying to pull out some main things that were great growth, and there were so many I just had to limit it down to two. So I put active buyers, which is probably the biggest part of the company overall. That was still 18% growth, which is super. And the other big standout to me was the cloud growth. Now, obviously, the clouds, I like a company that's in that cloud sector. It's one of the biggest sectors that's growing right now. And Alibaba is the number one player in China. And Alibaba's cloud sector grew 76% year over year, which is fantastic. And that's actually starting to make a bit of a chunk of their revenue up now, which is really good. I like, there was Alibaba's, in the brick and mortar stores, the actual e-commerce site that they run, the cloud side of the run, every other little sector they're invested in, every single thing that they're invested in was pretty much growing. But for me, to have the core business still growing at that rate, and the cloud sector, which is one of the most interesting sectors to get into, and one of the most potential sectors that could grow for Alibaba, to be growing at that rate still is fantastic, and still the number one player out there right now. And if you have chance, read the Alibaba numbers that they pulled out, because they were fantastic. So, talk about Alibaba, what I'm going to do with my shares going ahead, and my kind of thoughts of Alibaba. Obviously, you can tell, if I was to rate Alibaba, I think it's a buy. At these prices, I think it's a buy. I think it's an absolute steal. If you don't have JD or Alibaba at these prices in your portfolio, then I would definitely consider putting one of them in. I'd say probably Alibaba is your one right now. When we look at the stock, it's still sitting at $175. Now, I've said this so many times before. I believe Alibaba should be, last year, if it wasn't for the China trade war and the China slowdown, I'd say that, in my opinion, Alibaba would easily be a $200 stock right now. If not, I'd say probably $250 a stock. Obviously the P is at 26. Forward P, the actual P is around about 30. The forward P is 26 right now, and the normal P is around about 36 right now. Which is really low, especially when you're looking at companies that are growing at this rate right now. It's super low. A lot of US stocks like Amazon, for example, Netflix, that would be growing at this revenue and EPS rate. A lot of them would be trading at a P of above 50. So it shows you it's like half the price of what an American company would be trading for. So in my opinion, there's so much value in this stock. I think it should be in the $200 per share range at least. I think that the target would be $250 a share. In my opinion, I'm considering buying a few more shares in Alibaba. I'm just kind of like watching it right now, deciding what to do. I don't have too much exposure into China because there is potential for it to go down, depending on what comes out about the China trade war, the China slowdown. Sometimes there's some good numbers coming out, sometimes some bad numbers coming out, and I don't want to get too exposed because I do have two companies that are investing in two companies right now that are in China. So I've got to be a little bit cautious as well. So my kind of feeling right now, this is what I'm considering. I don't know if it is for sure, but I've always said I like Alibaba more than JD. But when I invested into JD, I felt like JD was more undervalued than what Alibaba was. Now, obviously, I'm quite up a bit on my JD position. My Alibaba position, I'm down slightly. So my considering right now is that I'd like to invest more into Alibaba, but being cautious. So maybe I'll take some profit out of my JD position, sell maybe half of my JD position, and then put half of my JD position and the profit into Alibaba stock that is probably, in my opinion, slightly more undervalued now than what JD is right now. But not sell all of my JD position off, just cut it down to about half, and then extend my Alibaba position. So that's what I might do. But like I say, JD, Alibaba, both great companies to buy. So yeah, I really rate Alibaba and some really good numbers from them. That's the video today, guys. Talk about Alibaba earnings. I hope you enjoyed it. I hope it helped you if you were looking to invest into Alibaba. Thanks for all the support recently. And we just got past 260 subscribers, which is amazing. So thank you for that so much. Give the video a like, subscribe. I'll see you in the next video.